you're missing out on like 8 years of a bull run, just because you hit your
Right.
measure move. What's that about? I,
That's a good point. Yeah, chart patterns are good for swing trading, but yeah, like if you want to catch a big move, like that's not what they're going to be
uh,
used for, really. You know?
it's like, yeah, man, we have so much. Okay, I'm gonna start it. I'm gonna. Let's might as well start it, right? Go live.
Okay.
This is cool, cool stuff. I have the chat open, so if ever somebody talks, I'll try to.
So is the chat on YouTube or is the
Yeah,
chat
it's on
on?
YouTube. So if you open the link that I put to YouTube right now, you should see the chat. Yeah. So if ever I'm talking and somebody just chime in there.
Okay.
I'm gonna do transition. So right now, man, the last time I did a live chat was a while ago. There, I've neglected my podcast, my YouTube for a little while there, but this is fun. Usually I do a sound check because I'm never sure how they hear us.
Looks like are we live yet or
It's
no?
live now. I'm pretty sure it's
Okay.
live now. There's a oh wait, yeah, it's live. But I think there's a lag. So right now on the YouTube, they might just see. There's people. Gabriel's there. Okay, cool.
Okay.
Gabriel? Do you hear us? How's the sound? Oh, let him type.
Hi, Gabriel. Yeah, I mean, I guess we're live. Do you want to
Yeah, let's do it. So yeah, Gabriel, if you can't see us, let us know. If you can't hear the sound, let us know, or else, well. Yeah, man. Yeah, so yeah, I reached out to Justin, man, because I remember back in okay, I'll go back. Might as well go back a little bit, and then I'll introduce how you came into like my radar. So I think in 2006 I started doing. I started getting some money, like starting to work, and then what am I gonna do? Maybe 2005. So most people, they don't know about technical analysis. They know nothing. I went like on the Investors Hub, all these penny stock forums. I don't know if you ever went there, Justin, on these websites there where it's mostly penny stock scams, but we don't know, right? It's somebody who
mhm.
bought in a little while earlier, and then they're pumping up this name, and they're probably selling into. And man, it's a miracle I didn't lose like everything, like because I didn't know anything about technical analysis. The only thing that got me out is some nights there were so much fluctuations. My my instincts were telling me, man, you got to sell. This is like you're not mastering what's happening there. You're losing sleep. So I sold everything. And then my cousin one day he showed me the book. He says, Patrick, you got to read this book. So I think it was in 2006 or seven. This Stan Weinstein Secrets of Profiting in Bull Markets. And
Mhm.
Jesus hell, man, I read that book and everything made sense. Everything that I knew in my instinct, like just like the first chapters, he tells us about the casino stories. Remember that one? He says nobody wanted casinos in the 80s. They sucked, fundamentals sucked. But he knew something was building up because he saw the price action was basing, starting to turn up. And then I
Right.
said, man, he's right. He says all the information of everybody out, everybody who's a hedge fund manager, who has money, everybody has an opinion, but at the end of the day, they have to buy, right? And it's that aggregated buying and selling that makes a price action. Jesus, man, I had shivers after that when I finally knew I had an edge after reading that book. I said, Jesus, I might not understand everything. I might have to reread this, but I finally knew I had a chance to not get wiped out, man. That's like the best feeling in the world after reading that book.
Yeah.
That's why every
I
time,
I, I kind of went on the same like
yeah,
journey as you, where I read a bunch of books early on, and I read a lot of books on like value investing and fundamental analysis and stuff, and like I found it to be very. First of all, you had to do a lot of work, and then like I wouldn't see results right away when I would look at charts and like look and see what stocks are doing based on what I was researching, right? Like sometimes you try to like look at fundamental information, like it's totally divorced from what stocks are actually doing. So like that whole discrepancy really bothered me when I first started researching stocks. So then when I first started charting, like I think it's natural to go into technical analysis where you're looking at chart patterns and like trying to make that work. And like, I found mixed success with that, with like all the different chart patterns that I learned. And then like, yeah, I eventually stumbled on Stan Weinstein's book and like other books that are based on just like simple momentum systems. And once you see like breakouts working on charts, and then you look at his system and how simple it is, like you see like what he talks about working like immediately on the chart. And that's what like gave me a lot of confidence
Yeah.
that this is like something that actually works. And then um like learning the system and using it myself, I was able to like do the same research that he was talking about in the book and apply it and actually, see it working. So that's like, and like a lot of the traders I think have had the same journey. Like Jesse Livermore was a price action based trader. Nicholas Darvis, like he talked about fundamental analysis not working for him, so then he went to price action, and that worked. So like it's not it's a pretty common thing to for people to find their way into like a momentum, like a price action based system. But I think it just works better and is a lot easier to understand.
Justin, two things. Have I been pronouncing Stan Weinstein's name wrong for all these years? Is it Weinstein? Is that how we,
I
that
think it is pronounced Weinstein. Yeah, Stan Weinstein. So
Jesus.
I've
Man,
said Weinstein before too, but yeah.
I've been saying Weinstein forever. I'm so sorry, Stan. Is Stan still with us? Because I haven't. He's low. If he is, he's low profile. That guy. Because I've had.
I just came across an article. Uh, I have like a Google alert for Stan Weinstein. So anytime Stan Weinstein's name appears in Google, like I get a Google alert in my email, and I actually got one like last night, I think, or the night before. So I think he's still publishing his newsletter, but I'm not sure much else besides that. I haven't seen him in an interview. He was on Financial Sense, like I think in 2012 or 2013, and that was like the last time I heard an interview with him. They had him on like two or three times.
Wow.
Um, so yeah, I think he's probably pretty old though now, like because I think from what I read one time, I think he was born in like the 40s or
Jeez.
yeah, like the 40s or maybe early 50s. So he's getting up there a little bit, but
And
yeah, I'm sure he's probably doing the same stuff though. It's been working all these years, right?
like,
Like,
the it's like the only thing that could happen is human nature. You kind of get bored sometimes of doing the same thing, and you sabotage yourself. Like it's like you have the perfect wife, and then after that, you just go to the neighbors because you want something different. But no, his system is tried and tested and true. And I also read, I think a couple of years back, I read Mark Minervini's book, I think Market Wizard or something like that. And there's a chapter in there. He says he actually crossed Stan in a convention somewhere, and that's where Stan talked to him about stage analysis, and that's how Mark Minervini, I think like one of the best traders of all time, he got his stage analysis. He's using stage analysis as a core component of his current framework, man.
yeah,
Jesus.
Mark Minervini talks about stages in his books, and you can tell his framework is. I mean, he knows stage analysis. I mean, like he doesn't buy any stocks that aren't in stage two. So like he buys stocks that are coming out of BCP patterns, breaking out, and he trades a little bit differently. Like he doesn't really wait for the breakout. He just looks for the contraction pattern and then buys that. But he's still using stocks that are in stage two to trade. So he won't trade stocks that are in
Yeah.
stage four or other stages that aren't, that aren't going up, I guess.
So that's like the whenever like I have doubt, I come to the rules of Stan. Never go long a stock below a 30-week moving average, and never short a stock above a 30-week moving average. Just that rule, man. Right away you could put the scrap, you could put the garbage away. Right? Like why?
Yeah. It's gonna like if you hold a stock in stage four, you could lose a lot of money, and that's the bottom line. If the trend is down, that's the easiest way to understand what the trend is to plot it on a chart and use the moving average to know what the trend is in relation to the price. So I think everybody's probably been there at some point. Like we've all made mistakes with stocks, but yeah, it's once you learn the stage analysis and if you're using it properly, you shouldn't be doing that. You should be getting out of stocks that are going down in
Yeah.
stage four.
Check it out. I'm going to share my, just to outline for folks there that, I guess, can you see my screen, Justin? Yeah.
Yeah.
So yeah, let's say any. Do you have a stock you had in mind? We could check up.
I mean, you could look at. Why don't we just pull up gold and for a second? I know a lot of your followers are, that's like one of their main interests. So,
Okay,
I
let's do.
think gold's in an interesting point because it kind of it kind of looks like it's in stage three to me right now, right? Like it's kind of like the moving average is going sideways, but it's it had a stage two uptrend that broke out in 2019, and then it kind of topped out in 2000, mid 2020, and it's had a little bit of a longer term pullback here, and now we're kind of like
Oh,
oscillating above and below a flattening moving average. So, um,
here I have the. Do you use the 10? Because there's a trader's way and then the investor's way. Investor's way is Stan use the 30. I don't see much of the 10.
yeah, I use the 50. The 10 would be the 50-day moving average. I use that on my daily charts,
Okay,
but I don't use. I don't typically plot the 10 on my weekly chart. But that's actually an interesting point. Maybe I should do that.
and you're using the EMA though, right? I've noticed.
I like to use the
Yeah.
EMA just because I feel like when something's like moving fast, it's gonna affect the moving average. Like the EMA gets adjusted quicker than the MA. So
Ah.
people ask me that a lot, like why or which one do you use? I use the EMA. I think they both work. So I don't really think there's much of a difference there, but
Oh, okay, so this could be your setup. Okay, the 30 EMA, and what do you compare it to for the Mansfield relative strength? Gold, you would compare it to the US dollar or the SPX? What do we want to outperform when we're in gold?
I usually compare everything to the SPX
Yeah,
because I feel like you could just index if you don't want to trade. I mean,
yeah.
so if you're trading, you should try to outperform the S&P 500.
So yeah, so
Uh,
this is pretty cool. On TradingView, there's a guy that who programmed a Mansfield relative strength. Because for years I was using the RSI, and somebody told me, no, Stan, he's talking about the Mansfield relative strength, not the relative strength index. And then I figured there's like a calculation to it. So you compare it to the SPX, and if you're right now, it's not. Actually, I think Stan, he said you had to cross over the zero line, right? That was super bullish. If you could cross over the zero line above an inclining 30-week moving average, then you were in business, right? That would be actually your.
yeah, like the ideal breakout is like a breakout out of the base when the relative strength is finally first like breaking over the zero line, and then you see the big increase in volume too is a key component
Ah,
to like the breakout.
hold on. I'm gonna get the volume. That's another big component. And where's my vol? Okay, here I'm gonna add the volume because I remember now it's starting to come back to me, Justin. I did it. Stan Weinstein for that's gonna be hard for my brain to stop saying Stan Weinstein for Stan Weinstein. Because I started doing Forex and then I was doing interactive brokers Forex and there was no volume. Then I said, man, I can't even use Stan. Like it was kind of broken. I said, I don't have volume. How? And then that's why I think I started doing classical chart trading. I tried to find another framework because of those Forex pairs. Interactive broker didn't have the volume. Maybe that's better. Looks less like looks less of a cemetery. So okay, what do we have? Okay, so gold. Okay, here's the volume. Let's do this.
Yeah, and notice like there was a lot of volume around like the coronavirus panic in 2000, like March 2020. Like obviously like a flurry of trading going on like during that
Where was that? It was here, right?
like
Is
mini
that March?
meltdown, and then it kind of bounced back up. Um, but yeah, if you zoom in on, you can see the breakout though. If you go down to like 2019, yeah, in June, like you
Yeah,
can see the basing structure right there, and then the big breakout on volume. Like,
right here.
yeah, that's the stage two breakout. So that's where gold broke out into a stage two
Ah,
uptrend.
and as much as I like gold and all that, and this was the time to buy. So you know when people say, "Oh, gold's late," and copper or everybody's going up, people forget that gold broke out. Like that's when it broke out. For me, that's the date right here. Beautiful base, broke out, inclining 30-week moving average, going above the zero line, and that increase in volume right here, right?
Yep. Yep. That's and it was a big base too. Like this base went back to 2013 is where gold
Ah,
bottomed out after the stage four downtrend, and then you kind of had like a little bit of a breakout that worked for a little while in 2016, but um, overall the basing structure was like 5 years plus in duration. So that's why I remember I put out a video like right as this was happening. I'm like, this is a pretty interesting breakout because this is a huge base and it's got all the characteristics. Like the volume was good on the breakout. And I think like there wasn't a lot happening in the regular stock market at this time too. Like I remember I think the S&P was fairly dull. So like gold and silver really like took over like the summer of 2019 and kind of had a quick sharp rally there.
did you play the 2016 rally?
Yeah, actually that's where all my most of my performance was for 2016 was in that rally like in the beginning of the year.
So you caught it here.
Um
How did
yeah, I
you?
had like I had a First Majestic Silver which went from like
Ah,
3 to like $18 or something like that that year.
that's a.
Um so that was like a just a
Oh
monster
Jesus!
move, but
You
it
caught
was what
this.
was interesting was like how I remember all these people were predicting this thing to keep going here, and then it just totally fizzled out.
So you sold when you closed below the 30-week moving average?
Yeah, I sold when yeah, like when the volume, like the things kind of started selling down, and like yeah, when it got down below the 30, I was out by then. But like I typically when I see like high volume selling, I'll start taking off more and more as it looks like it's not working anymore. So I
Ah,
can't remember fully like what I did with. I know I owned a couple different stocks there, but I know First Majestic was one of the main ones, and that was like, fortunately for me, is was one of the better ones at that time. But you can see the volume here again. And this was a little bit weird because the stage one base was pretty small, so it just kind of like got out of like a stage
it was
four
fast, right?
downtrend, and then based for like 4 or 5 months, and then just erupted on volume out of that.
Yeah, the volumes is such a tell, such a tell. That's what Stanley said, right? He says you could have some bullish price action, but if there's no volume, he didn't trust it as much, and he said, okay, I want the volume, I want it's like you want that the you want an impact. You want like a strong rate of change in something, and that's your edge. You get in early, and by the time the market fully prices in this like increasing interest, you're in. Man, but this you know what brings me back to your trick that I took off you, and I'm using it all the time. It's a distance from the moving average, man, Justin. So the credit, guys, it's from Justin. That's where I picked up my distance from moving average. That is so smart using that there. I don't know where you got that from, but once,
Well, I got it from like just looking at a lot of charts and seeing like how do you I wanted like a gauge. I don't want to use oscillators as much as just I want a simple gauge of like extension from like normal price levels.
yeah,
So I feel like oscillators they hide that extension because sometimes stocks will go like multiple hundreds of percent above the moving average. And like the oscillator really won't show you that. It'll just say it's overbought, but
elf,
it doesn't really show you like the magnitude of how overbought it really is or
yeah,
how like extended it is. So
yeah.
the distance from MA, like, and that can, and sometimes that, like, I think you can go back in time and say, like, well, it's really never been this extended. So that's probably a unique case for this stock. Like, I think you're showing here, like
Well,
in, 2011, like that was like the last, that was like another huge run for these stocks. and it got really far above the moving average there as well.
Well, it's kind of it's kind of a trick. Well, a trick. What it's previously been known to do to get stretched before it starts fizzling out. Then you could once you get here, so okay, look, last time it got around here, it was starting to get stretched. Doesn't mean that it can't go higher, but you could start taking profits like every time you hit that line. If you're lucky, you get to hit it twice, and you take more and more off the table there as you get stretched. Because I'm pretty sure, like you said, when it was that stretched, everybody thought it'd go on forever, right?
Exactly. Yeah. Like a lot of times these moves you just never know, but yeah, like you can have like little rules. Like if it gets this stretched, like at least take some profits and then try to ride the rest. But I use a mix of selling into strength and selling into weakness because you never know when the top is. So you want to hold some for like as long as you can, but you don't want to hold everything because if it tops out and goes down, you're going to lose. So a good combination is just to sell into strength and then sell and then try to hold the rest.
So would you like you would try every time you get these strong rallies here, you could always take a little bit right, and if you could add here, but if it goes back down, it's not that bad because you already took your profits here.
Yeah, it just depends on like what you're trading at the time and like um yeah, like for I mean I like gold. Really, what's interesting to me right now is silver. I don't know if you want to
Yeah.
show silver, maybe because that's what I was. I think I've tweeted about that a little bit, and like I'm sure you're stalking it too. But like since gold is in stage three, like I feel like we still have to wait to see what it's gonna do. But silver is like the one that's like set up for a potential breakout.
Wow. Like I'll show the continuation. I want to show that picture you keep showing there, but those are the. If you didn't get, oh, let's go. Well, let's go on your website. Do you have those? Do you have like this? Okay, guys, I'm gonna circle back when I restarted doing stage analysis in 2012. Because in 2006, after reading the book, there was not much on the web. I started Googling, and then I found stage analysis. I found nextbigtrade, the website, and he has the screener there. So at the beginning, it's overwhelming. Like, oh, I just read Stan Weinstein. I want to find stage two stocks. Well, I always want to ask Justin. He has a background in programming, and he did
Mm-hmm.
this himself, and it's updated. Correct. Stop me anytime if I say something wrong, but you get all he's identified according to his criterias, which ones are in stages, and by sector, by industry, and then after that, you could already view the best of the best right away and save a lot of time. It's crazy. I forgot
Yeah,
about that.
it was meant to be like a screening like research tool. Like I wrote this tool like in 2015, I think, and it's been running for about 5 or 6 years now. But it updates like once a night, and I created an algorithm that calculates the stages for all these stocks, and then the website updates with the new data, and then yeah, you can use it for like research. So I mean, if you want to like if you're new to stage analysis and you don't understand like the different stages, like you can use that tool to maybe help your learning curve improve like a lot faster. I think like by using that.
I agree, because you got to remove like the maximum of noise, and this is once you read the book and you know the criterias of A plus plus setups, like the explosions, the volume above an inclining 30-week moving average. After a while, it's hard at the beginning, but after a while, you just see them, the setups. As soon as like you're starting to pull back towards the 30-week moving average, then that's the setup. And as soon as you see that you have a breakout, a continuation, that's the picture I want to find, Justin. The picture of
Oh
that's,
yeah, go to the stage analysis page, yeah, on my site, and then the breakouts are there, like the ideal
there you go.
breakouts.
Yeah.
Yeah, if you scroll down to
You
the
put,
stage two
yeah. Yeah, this
section,
one.
yeah, like these ones. Yeah, see these tell you like where you want to be buying
Check, guys.
specifically in the life cycle of the stock. You want to be buying right at the breakout point. So like in the case of, so that's why we're stalking silver right now, right? Because like it's forming this sideways base that's bumping up against the moving average, and the consolidation is getting tighter and tighter, which was what they're showing here. So it's a set right now. It's just a setup. It hasn't broken out yet. You haven't seen the huge increase in volume, but
Uh,
it's something to watch because it's getting there.
I'm gonna put the volume.
And actually, like I don't know
True.
if
There's no
do you care
volume.
if I share it for a second?
Yeah, I'm gonna have to authorize security.
Okay.
Allow participants. All right, you're the boss.
Okay. Cool.
I'll
You can share
stop
some more.
share. Hey, we're back. Hey
Um,
man, Justin, it's super cool, man. Talking to you, doing this, man. I should have done this a long time ago. I could probably talk with you hours about this, like all my Stan Weinstein, all my like Jesus, man. We're gonna. There's so much stuff, man.
make sure it is. Okay. Yeah. There we go. Okay. So you can see my screen now. So,
Yeah.
um, yeah, for sure. I mean, yeah, I think it's great. Like I remember when you first got on Twitter and stuff. Yeah, it was great. Like just hearing another person talk about stage analysis, and like you were, like asking questions and just interacting with me and stuff. So it was great. I mean, I feel like there's a lot of people that are interested in stage analysis, but not as many people providing content and stuff. So, and like you've become like a prolific chart chartist on the internet and stuff now. So I think it's pretty awesome to have another person like with your background like on the internet like providing information like this.
Uh, Anything I could do to help, man, because stage analysis, it saved my like my capital there. I give it 100%. That's why I'm not broke. Like I didn't wipe out, you know. So it's I don't know. It's tried, tested, and true, and it's probably the easiest system out there. The easiest.
I think it is. I think it's, I mean, price-based systems. I mean, you can do different things, but this is one of the easiest, and it's a complete framework too. Like it's got rules for buying and selling. It's got ways to just approach the market that are really simple. So I think yeah, that's why I like it. And yeah, I think if you're totally new to the market, this is a great place to
Ah
start.
man.
But
So
anyway, so yeah, on silver, so this is the weekly chart of silver here, and so it's been basing for almost a year now. Like it's getting into, like we're in June now, so it's like you had the stage two breakout in July of last year, which really caught me by surprise, like how quickly it kind of fizzled out. But I think I have a theory about like what's really been going on in the markets that I guess I can talk about next. But yeah, you can see like the explosion in volume
oops.
here in silver. Like this is another basing pattern, and like this overall basing structure in silver goes back like obviously as long as gold does, but silver um, didn't really have as big of a move in 2019. So we had a big explosive breakout in 2020, and then now it's in this basing pattern again, and like on watch for another continuation breakout. Um, but I think like I wanted to show I think it's over here. This is a chart of gold compared to Bitcoin, and I think like this kind of explains like the
Mm.
the impact I think Bitcoin might have had on gold the last like 5 years. Like essentially, Bitcoin had a big run in 2016 and 2017, right? So that was like the first, like major stage two advance, like that, and that's in green here on the chart. And then you can see that gold really didn't do anything. Like while Bitcoin, like gold had a little bit of a breakout in 2016 that we talked about, but then it got back into the base, but it didn't do anything while Bitcoin was really having its first major run. Then like they both corrected, but then you had this big rally in gold in 2019, right? Well, Bitcoin didn't do anything like really when gold was rallying, but then it was just completing its another basing structure while gold was rallying. Now then Bitcoin breaks out into stage two in like fall of 2020, or maybe a little bit earlier, but it was around then. And right at the same time, gold started having trouble, right? So like gold goes into a major pullback and is now kind of like in stage three. And now we've seen a huge pullback in Bitcoin and potentially maybe even a longer term top in Bitcoin. So I think this is going to be interesting to see like what gold does after this, because they've been trading like inversely, like as far as like their cycles, like it, Bitcoin had a cycle, then it consolidated for a while, then gold had a cycle, it topped out, has been consolidating, then Bitcoin had a cycle, now Bitcoin is probably topped out and consolidating, and now what is gold going to do? And like that's what's interesting about silver to me, is because silver really hasn't, because silver, like you've studied this for a long time, like silver tends to break out later than gold, right?
Yeah.
Like gold will break out first, run for a long time, and then silver all of a sudden will catch up and go crazy, right? So that's why like this setup in silver is interesting, because we haven't seen this really continuation of this breakout yet in silver. So
Yeah, I know. Yeah, I've put a that I just retweeted that there, just like a reminder that silver. I know it's not, the past is not always the future, but on the previous examples, and especially like we see that silver is closer to a continuation breakout than a breakdown, right? It's still in the stage two. So you you gotta stay bullish. You still, for silver, you have to have, I think, a bullish bias until the price action starts closing below 30-week moving average. Then you could say, okay, I'm in the stage three, like gold did. Gold's a lot weaker. But man, look at that! Like, it's coiling up. Even Mark Minervini would probably like this, right? This probably is VCP, like the higher lows, tight.
yeah, I think the correct way to view it is it's a setup right now. It's
Yeah,
not really, it hasn't broken out yet, so there's nothing really to do, but it's something you want to keep on your radar, because once it does break out, then it could be have a big move potentially, because of how big the base is. It's hard to find bases this big when the markets have all been moving up for a while. So like, and if you go back longer term, it's an even bigger base. So that's why and also like it's way behind gold as far as like where it's gone in terms of where it's been. Like it's still not even close to its 2011 highs, where gold's already
yeah.
pretty much at its 2011 highs. So
So
there's a number of factors that lead to you got to at least have it on your radar. Like if you look at like the daily chart, like yeah, you've seen like I tried playing, like it looked like it was going to break out in early January, then it pulled back. It looked like it was going to,
yeah,
like the silver squeeze. Like I mean, the volume that came in on that was just you know huge, and then that thing got sold into, and it's just been basing ever since then. And then now it's like consolidated. It was kind of getting tight again, and like I was kind of thinking like maybe it's going to do it this time, but now we appear to be, as of today, like maybe in another pullback. So it should be interesting to see like what happens in this pullback, because we're getting like tighter and tighter in this wedge now. So like it's got to go one way or the other, right? Like, and that's what like forces markets to have big moves, because like the price action, like all the sellers that want to get out, like the people that are frustrated, like, oh, I'm tired of this thing like going sideways. Like it's just I'm out here, Like once you get rid of all those sellers, all of a sudden there's no more selling pressure, and then it goes boom. So it's going to depend on like kind of like what gold's doing, because gold's got a huge influence on silver, obviously, but it's definitely something you want to keep on your
yeah.
radar.
Do,
Like some of these, go ahead.
yeah. You don't like, I see you are taking like elements like outside of just the chart, right? You're adding weight of evidence, right? But your weight of evidence, I'm pretty sure you're not including commitment of traders or comics and manipulation and all that type of news, right? That's the aim, right, of using stage analysis is you remove all that noise of
I personally don't look at that stuff. Yeah, like
well, okay, let's say for
the
silver
price is
squeeze.
gonna, I mean, the price is gonna do what it's gonna do. So,
Yeah,
and that's where you make or lose money, right? So like if you stick just to the price and the volume, like it's not gonna, it's you're going to be in sync with the market, and you get into trouble when you're out of sync with the market, where your opinion on the market is not what the market's doing. That's where you can get into big trouble. So if you have a theory on what the market should do and you're proven wrong, you have to
yeah,
admit that you're wrong, move on, and maybe come back when you're right. Like there's no reason that, I mean, you have to have an open mind when you look at these things. Like you can't just, if you convince yourself that it's got to go one way or the other, if you're wrong, you're going to be in big trouble. But if you have an open mind and say, well, here's a setup, I think it's in position to break out, but I don't know exactly when it's going to break out. So I just got to keep watching it and see what happens.
yeah,
And it's, again, like it's a matter of patience and just paying attention to what's going on. And like things can change dramatically. Like back in February, the volume came in, but it was like there was a lot of things going on. Like you had like the meme stocks, which have been going crazy again. Like they were all hyped up, and like there was just a lot of madness in the market. And like this thing just got sold into really and came back down, but it's still just been consolidating. Like if you look at it, it really hasn't lost any ground since then.
I know.
It's just been consolidating. So all it is psychology wise is just wearing people out right now. People are just getting tired of this. Like like it's just,
Yeah,
when is it going to do something?
but yeah, but you're totally right because look, I'm talking about silver all the time, but if I wanted, if I want to not burn my emotional out, I should just put an alert like a horizontal line or put an alert for 4 times the volume and just close my monitor, close Twitter, and just whichever stock breaks out first, that's the one, that I should focus on, because you're right. This has been consolidating for 8, 9 months. Like, Jesus, like
Yeah,
you give,
right. Like that's exactly right. Even if you miss like the early part of the breakout with the base, I mean, look what it did last year in July. It had quite a big move. Like this kind of fizzled out fairly quickly, but still had a very big move over a short period of time. So yeah, I think like if you're watching precious metals, this is probably the one to watch right now. But it's interesting. Like I put out a tweet about Bitcoin, how it, like the Bitcoin chart looks exactly like the stage analysis chart where he was talking about how to manage a trade. And like you can already see that Bitcoin broke below the 30-week moving average. And he
it's
talks
below
about putting
now.
the stop. What's that?
It's below the 30 week right now, Bitcoin.
Yeah, well, for the 30-week EMA, yeah.
Okay.
So some of the other cryptocurrencies like Ethereum and like Dogecoin, like they're still pretty far above the 30-week, but Bitcoin is below it. So it should be interesting. There's a lot of selling volume here, like when this thing crashed down. So there's probably a lot of overhead resistance now, like on this chart. So even if it, Bitcoin could rally to 45,000 and still be above a ton of resistance.
Yeah. It's I call that damage. To heal that type of damage, you either you need time to heal it. Either you need time. Look what gold did. Anything that goes parabolic and breaks down, like I've been doing studies recently, like 70%. Bitcoin didn't quite do it that yet. It takes years. Look at gold. It took 10
Oh
years.
yeah, like look at gold in 2013. It came down from like 1,800 to 1,200 or 1,000, and it took years to base out and bust back into that range.
Yeah, Nasdaq after the .com bubble, it took like 8 times longer than the bubble to get out. So let's say it took 3 years to go bubble up, bubble down. It took like 8 years or 14 years just to come back to break even. So
Yeah, if you
there's,
go back even, yeah, like let's see here. If you go back to like 1998 or something.
yeah, and
Yeah, so and that's interesting you bring that up because like this decade is really where I started looking at the markets, and like the commodities were like what dominated the first decade of the 2000s. So like when, yeah, like technology stocks had a huge amount of resistance, a lot of like blown up charts. Like Amazon went to like, like nothing, and you can't even see. I got to do like a log scale chart here. Like yeah, Amazon crashes, takes like basically an entire decade to base and make up
Jesus.
its make up the bear market that it just went through, and then it busts out and has had a pretty big run since then.
Yeah, people forget those that it took time to recuperate. We have short memories. We look, oh, it's close to all time tops. Fear of missing out. It's going to the moon, and then history repeats again. It starts going down. Nobody believes. Ah, it's gonna bounce back up. It keeps going down, and then you sell at the bottom.
Yeah, well, now you have a whole generation of investors that has no idea about
Yeah,
a big downtrend in like these big FANG stocks. Like they'll, if FANG ever goes into a stage four downtrend, people are going to lose their minds probably because they have never seen it
yeah.
before, like, or they haven't seen it in 20 years.
It,
So it's going to happen eventually because everything goes into stage four eventually. But it's just going to be a big shocker because so many people are convinced like all you got to do is put your money into a FANG stock and it just keeps going up.
is Tesla still alive? Like we haven't heard. Is it stage three Tesla? I haven't.
Well, yeah. So Tesla had a big run last year, a monster. I mean, this is an absolute epic run. Like and I caught like the first part of this run back here, but um, it, I mean, like it took Tesla. I mean, Tesla went sideways for. Tesla had a pretty big run in 2013. If I do a log chart again, and then it based out for 6 years, and then it broke out again. I mean, it could do another sideways consolidation for a number of years,
Yeah.
or I mean, it could break out again. You just never know. But look how long it took for Tesla to digest this first move right here.
And stage analysis would have permitted you to ride most of that.
Yeah, this is a clean stage two breakout right
Yeah.
here. You see the volume.
And there's measured moves, classical charting. It would have not permitted you to ride all that because the width, like let's say classical charting, it's the height to the bottom, and then you add it on top. But it wouldn't have brought you. You would have had to do smaller chart patterns along the way. Oh, I have a pull, flag, pull. You'd have to always be doing chart patterns along the way, or just stage analysis. Uh, you're above, and there was opportunities to add on, right, on these continuation breakouts. There was, I think,
Yeah,
around
Tesla
400.
had a couple last year that
Yeah,
were good. Like it broke out in
that one.
November. It had a breakout in June, and then
Jesus,
it had one like coming out of the coronavirus panic. It broke out again in early April.
it's
So
it's
you had a few different buy points in Tesla, but again, like now you have a lot of people that are convinced Tesla's the best stock ever, but it's below the 30-week moving average now, and it's been like doing nothing for 6 months now. So it
but
sometimes you
it
got to just. I mean, if you catch a big mover, you got to take some profits and then look at moving it into something else. Like
yeah,
nothing goes up forever.
yeah, we have a tendency to get attached to stocks, but praying and hoping is that's why we do chart analysis, right? Is to not pray and hope anymore, to remove that, to gain some
Yeah, I mean,
power.
charts tell you what's going on. Like you can go on Seeking Alpha and try to figure out like why things are happening, but the chart will tell you like what's happening, right? Like this is telling you the whole story. Like Tesla had a
Yeah,
huge run, now it's consolidating.
Jesus.
I'd put it in stage three now. It's the moving average is flat, like it's
Yeah.
moving above and below it a little bit. I mean, it could consolidate, it could break out again, or it could roll over. You don't know. but it's in no man's land right now,
Yeah,
essentially.
that's the
And
word.
Stan Weinstein's rules for after a stage two, so if you catch a big stage two winner, you got to sell at least half according to his strategy, because you know that it's not going to do anything in stage three. So if you want to keep it and hold it, you can do that, but you got to realize that you got to sell it if it rolls over into stage four.
And that that's the thing. The We don't know what's going to do next, so why just let the price action prove to you that it's willing to go up? You'll save time. You know that what they call it, opportunity cost. Stage analysis, it fixes that for you. A stage three, whether it be 1 week or 3 years, if you just get out, and whenever it decides to break out above, even if it's 5% or 10% up, who cares? At least you're putting the probabilities that you're gonna ride something meaningful. You're not gonna get whipsawed. You're not gonna die 1,000 cuts. That's horrible. Oh man, dying 1,000 cuts. We all do it at the beginning. Like people on the
Yeah,
daily chart, I don't know how they do it, or the 4 hour chart. Jesus, it's total mayhem in there. But
yeah, you have to know what kind of trader you are. You
yeah,
can't that's one of the things you have to figure out when you're looking at the markets. Like, am I going to be somebody that wants to hold for these big moves, or if I'm a day trader, yeah, I guess I'm in and out, but I'm not going to be using stage analysis because this is like a trend following system, really, and it's meant for trying to catch these big moves.
man, it's I remember that I when I used Stan, I shorted. I got like I read it just enough, but I shorted the 2008. It was everything below 30-week average, so I shorted like crazy. I was super happy with myself. And then I caught the profits at the bottom. I did a pretty good job when stuff was starting to close above the 30-week average. Then I changed my bias. I was like, I had no bias on any type of information of a stock. But the thing is, I was getting into these stocks above inclining 30-week average. They were going up, but I wouldn't let them ride. Even if the system told me not to sell, I sold them after. Oh man, I doubled my money. Like I bought a coal penny stock from it doubled in price. Oh, I took my money. I took my game plan. Even if I had the best game plan in the world, I threw it away.
Mm-hmm.
And I checked up on those stocks. They went 10x after that. They got bought out. I just because I think in hindsight, oh, maybe I was listening to news on TV. Oh, the market's gonna relapse. The market's gonna crash again, and I wasn't listening to the what the price action was telling me. You're above an inclining 30-week average. You hold, and I wasn't listening. I didn't understand. I was listening to CNBC, and everybody was still in bear mode. And Jesus hell, what? And I'm refusing to do that now. So even if there's wall of worries or bearish news, if I'm above an inclining 30-week average, I'm gonna ride it for 10 years if I have to. And yeah,
Yeah, I
mate.
don't watch the news or any of that stuff. Like,
Oh,
it's just a bunch of garbage. Like, they it's just like they're just trying to create hype and like
yeah,
headlines, and I mean, it's
clicks.
just they're not real traders. I mean, like, they could, I mean,
It's true,
so
right?
yeah, it's yeah, I
Um,
can't believe I ever even watched it. I guess when you're new, like, you think that they know what they're talking about, but once you like see it for a while, it's all garbage.
I agree, man. Told him it's fun, but you have to. It's good for coffee table discussions with your father-in-law, but that's it, man. It has I'm super happy. You said you had a great year last year. I think your best year ever. You did, man. And unsung hero, no noise, just following a pure trading system, and that's all people need, right? And you just said you didn't follow any news, get great results. Jesus, man, who no emotions, man. Like who
Yeah,
wouldn't want that?
I yeah, I mean, again, like, stage analysis allows you to, or any system that you have, you just need a system, and then you follow the rules, tune out the noise, and you can, there's just, I mean, investing, it preys on your emotions, right? Like, you're
Yeah,
always worrying about prices are jumping up and down. What should I do? Should I be buying? Should I be selling? Should I be scared of the markets right now? Or am I too bullish? Am I too bearish? Like, those are always things going through your head. If you have a system you can fall back on and say, like, these are the rules, this is
yeah,
what I need to do, that can clear your head and allow you to make like unemotional decisions and try to navigate all this craziness that goes on all the time. Like we just, if you don't have a, like you've got your frameworks, your system, like if you don't have that to fall back on, you're just like a victim of your emotions.
Dead man walking, man. You're a victim of one down day, 5% down day, or one, oh, Biden passed a new law making gold illegal, like whatever. Like you're victim to that. That's what's happening. If you don't have a framework, you're victim to a guy's tweet. Let's say you bought because the guy says, oh man, buy this, it's a hot stock. Okay, it's going up 10, 20%. But one day that the stock goes down and that guy's not on Twitter anymore, you're, oh, man, what do I do, man? You know, you have to take destiny, control of your own destiny there. And man, anybody that just, when people they ask like chart trading, all that, just go buy Stan Weinstein's books. Start with that. Just go. It's on Amazon, I think. Somebody said they can't buy it. There's no, but you could buy it used, right? There must be tons of copies.
I don't think it's ever had an ebook, but you can buy the paperback for like $20.
Yeah.
And I just downloaded the Audible